Hyperliquid is one of the few crypto success stories that's not just random meme coin gambling, there's actually some technical innovation going on. The token is not just hype, even though it's called like this, there is real adoption. We're going to look at the data in more detail in this video. The main question is, does it still make sense to buy into the hype? Is the current valuation still sensible, or is the upside potential already completely realized? Let's have a look at relative market caps as well. Let's see if this all makes sense. Now we're currently at exactly $24. We are up 10% today, 75% this week, and almost 650% since listing on CoinMarketCap roughly 2 weeks ago. Hyperliquid is two things. First of all, we've got the decentralized exchange. It's not just a spot trading exchange, it's an exchange that's focusing on bets on the price, on perpetual futures, on derivatives. The second aspect is that Hyperliquid is its own blockchain. So it's not a decentralized exchange built on top of Ethereum or built on top of Solana. It's its own blockchain with its own decentralized exchange. And so the hype token can't just simply be bought on Ethereum. It needs to either be bought on Hyperliquid itself through bridging, or it can be bought on several centralized exchanges, the leading one being KuCoin. And so here's a quick summary why Hyperliquid might be worth watching. This is the total value locked on chain, and it pretty much exploded. We are now at almost $5 billion, very positive momentum. As said, we've got a decentralized exchange, and over here various assets can be bought with perpetual futures, and that means a lot of leverage, right? We can see the leverage over here, 20x, 5x, etc. And there's quite a selection. We don't just have the blue chips, we've also got meme coins, for example, Per over here, or the Goat token, or Popcat. But it's not just the decentralized exchange, it's its own blockchain, its own layer one. And it's also how the whole project is marketed. It's the blockchain where currently the focus is. Hyperliquid tries to attract more developers to build similar applications. Now, the big question with any decentralized exchange token and with any new layer one that's coming out is how much token inflation is there? How quickly is the supply growing? Because the demand has to grow at least as quickly as the supply, otherwise the price has to go down long term. And so of course not all of the tokens are already floating. It's different to just a random meme coin launch. There's currently 373 million hype tokens that are liquid, and the maximum supply is 1 billion. So over time the supply will roughly 3x. A lot of the token allocation will go to community rewards, and those community rewards might get sold off at some point. Currently the airdrop doesn't get sold too much, but it is important to know that Hyperliquid has real pressure to continue growing. The team will start getting unlocks in 1 year. But yeah, currently adoption is hyper bullish. On the left side, we see the total trading volume per day. On the right side, we see the open interest. We also see how the revenue that's not the Hyperliquid protocol is growing as well. So the blockchain has already been used for things besides the decentralized exchange. And then on the right, we've got the funding rates. Of course, when this spikes, this shows us that there's a liquidity crunch, that it makes a lot of sense to deposit your tokens here to earn that. Currently, we do not see such a liquidity crunch. In other words, APRs are somewhat reasonable, but they're still very competitive compared to the rest of DeFi, right? If you currently deploy your BTC on Hyperliquid, you can get 15% per annum. This is very atypical. A protocol like this makes money with both funding rates, but also with liquidations, right? When you 20x your exposure to Popcat and you get liquidated, of course, parts of those liquidation fees go to the protocol. And so we can see the P&L over time. The protocol is making money very consistently, and especially recently, people are getting a bit more degen and they do get liquidated. Getting into Hyperliquid is pretty much like owning a part of a casino that's pretty much growing, and a casino where the vast majority of people tend to lose. Because that's something very interesting. One might expect when there is zero KYC and every insider can trade, that then there might be some traders that take advantage of that system and that might pull money out of the system. But with Hyperliquid, we can clearly see how the profit of the platform equals pretty much the losses of the traders. So if you gamble with 20x on your favorite meme coin, you have a pretty high likelihood of losing. This is the trader's net profit and loss. And of course, traders tend to lose. Hyperliquid tends to win. Not everybody is losing, but the majority does. So don't be part of the majority. Make sure you've got some kind of edge in the market, that you're better informed than the rest in order to not end up like most. There There are so many unjustified rallies in crypto, right? There's all kinds of meme coin pump and dumps, and there aren't that many projects that really have fundamental adoption where the price rally is actually justified. For Hyperliquid, I do believe that the rally is justified. The protocol now is hyper efficient. If you quickly buy and sell something, you're not losing anything. And the vast majority of trading does not happen on Bitcoin, on Ethereum. It does now happen on those smaller alts. It happens on the meme coins. And so the usage is just exploding. Have a look at the new users. Since the launch of the Hype token, since the airdrop, we now see on average 3,000 new users each and every single day. People deposit tens of millions of dollars each, and they're generating billions of trading volume regularly. Now, of course, a lot of this trading volume is also automated via bots doing arbitrage trades. Now, decentralized perpetual futures are nothing new in crypto, but Hyperliquid is very efficient. The transaction finality is very, very fast. And the fees are very, very low. And this, of course, creates a lot of volume. Now, have a look at other perpetual futures dexes. Hyperliquid now has a market share of more than 60%. It's eating up the entire market. Besides the decentralized exchange for those perp futures, there are, of course, also other tokens to buy. Because, again, this is its own blockchain. And on that blockchain, we have seen $500 million of trading volume already in the last 24 hours. Now, let's compare this with the somewhat hyped Sui blockchain that only had 160 million of trading volume. So less than 1/3. Sui has a market cap of 13 billion. Hyperliquid has a market cap of only 8 billion. Shouldn't the Sui market cap be only 1/3 of Hyperliquid's? Or shouldn't Hyperliquid's market cap be 3 times of Sui? There's definitely an imbalance here. The truth is probably somewhere in the middle. Sui is likely going to underperform Hyperliquid in the next weeks. Now, among the decentralized exchanges, Hyperliquid is already pretty expensive with those 8 billion. There's only Uniswap that's larger, and that's at 10 billion, and Uniswap is everywhere. And of course, within the decentralized perpetuals futures market, Hyperliquid is way ahead of everything else. It's almost 10 times the size of DYDX. Within DeFi, there are, of course, protocols that are larger, but I believe the main trigger here and the main push for future growth will be the adoption of the blockchain besides the perpetual futures. The upside is really not anymore in the perp market. The upside is in the very efficient technology that might make other DeFi protocols better as well. Within DEXs, Hyperliquid is already expensive. But when it can take market share with other decentralized applications from those other blockchains, that's then where it can do another 2, 3, 4, 5x. It's currently at 8 billion. Could it be larger than Avalanche? Definitely. Could it be larger than Cardano? Definitely as well. Will it be larger than BNB or Solana? Let's see. This is probably where the air will be getting somewhat thin. So another 10x from here. But again, we have to see adoption of other decentralized applications besides the perp market for this to happen. Now, crypto as a whole is currently expanding very, very quickly. What we've got behind me is the stablecoin market cap. And this is a 3-year chart. So it starts in July 2021. And we peaked in the stablecoin market cap in April of 2022. Over here, what happened was the Terra Luna collapse. So this is when Anchor Protocol went bust. This is when UST depegged. The market as a whole shrunk. Money was flowing out of crypto. And this is also where FTX collapsed. And then we saw the turnaround in October of last year. Now money is flowing into crypto again. And that's recently accelerating. The stablecoin market cap going up means, of course, that money is flowing from fiat into crypto. And that, of course, means that prices across all of the crypto space should continue to rise. I really like this chart because it has very little volatility. We can see the trend very clearly. In the short term, though, we might be slightly heated. What we've got over here is again a stablecoin market cap chart, but this time that's not in US dollars. This time it's relative to the entire crypto market. So you might have heard of the Bitcoin dominance chart, right? How much of all of crypto is currently in Bitcoin? That's, by the way, currently at roughly 60%. It tends to peak at around 70%. What we see over here is the stablecoin dominance. So how much of all of crypto is currently in the stablecoins? And there is a strong inverse correlation between this and crypto prices. So when the stablecoin dominance is high, crypto prices are low. And when the stablecoin dominance is low, crypto prices are high. And we seem like, at least temporarily, to hit some potential floor here, which might mean that some cryptocurrencies might see local tops. That being said, especially in the last few days, we do see how the altcoins tend to outperform the rest of crypto. So this is the others dominance. So this is the cryptocurrency market cap that's not in the top 10. And this did go up since beginning of November to today by 23%. It appears as if there is some kind of altcoin rotation happening. At least we see the beginnings of it. And so what was the best performer across all of the altcoins in the last week? It's Virtual Protocol. Virtual is a launchpad of AI agents on the base chain, and it almost tripled in the last week. This is the long-term chart, very impressive. And the big question is, how can we buy something like Virtual when it's not up there, but when it's somewhere down here? My answer to this question is wallet tracking. It's trying to figure out what are other smart investors doing? What are insiders doing? What are people doing that move prices? What are people doing that tended to make the right calls in the past? And so it's always nice to see what is the smart money doing, what is the not so smart money doing. For example, this over here. This is an alert that BitBoy Crypto sold virtual tokens at 1.4 cents. We don't have the alerts where he bought this, so maybe he got some allocation because he's an influencer, but he sold his allocation. He did this multiple times, by the way. And again, what he sold subsequently went up by more than 10,000%. And so yeah, BitBoy Crypto, in my opinion, is pretty much the Jim Cramer of crypto. It doesn't make sense to copy trade him, but it's interesting to see what he's doing. There are other people though that are worth copy trading. For example, over here, we've got Crypto Gains that bought the virtual token. That was at 5.8 cents. So since then, the price went up by 2,500%. Who is Crypto Gains? It's this influencer here. He tends to buy tokens relatively early, and he tends to also be very public about his purchases, which can generate, of course, a lot of attention and can bring in more investors, pushing up the price further. So he does very risky plays regularly. He's got 138,000 subscribers. And so how do we get these buy and sell signals? It's through finding the right wallets first and foremost, right? It's doing some on-chain analytics to figure out those wallets. And it's subsequently by putting those wallets in a wallet tracker and get notifications whenever they buy and sell. So over here, we've got the wallets by Crypto Gains that we are tracking. We've got 55 of his wallets. But then at a later point in time, we also see more people buying into the virtual token, the people that tend to deploy much more capital. For example, over here, we've got Kyle Chessy that bought $100,000 worth of the token, and that was at 48 cents. And so here is Kyle Chessy. He's got 137,000 subscribers. And since he bought, the price went up by 220%. We've got 12 of his wallets, and of course not every trade goes like this, but in general, right, I do believe it makes sense to follow the smart money. It is much better to follow the people that tend to make profit compared to simply just picking random tokens in a list. And so I like this approach that much that I made 8 dedicated tutorial videos just on this wallet tracking topic. They are over here. It's how to find various influencer wallets. It's how to track those influencers, and it's also about how to interpret the signals that we get from the tracking. It's all part of the premium membership of this channel that's down below, thebitcoinstray.com. It's not just wallet tracking that we do, it's also risk mitigation, portfolio diversification, backtesting. There's more than 100 tutorial videos in total in premium. Once we've got a signal, we of course also have to discuss when should we buy, when should we sell. That's why we've got our dedicated chats for the individual altcoins as well. So feel free to check it out. It's currently $165 per month. There's also a 1-week money back guarantee. So in case you don't like premium, in case you don't learn anything, just message me within the first 7 days and I will refund you 100%. There's really zero risk for you.